Good evening, guys. It is Wednesday. Yes, Wednesday, January 29th, 2025. This is Bathrobe Business. I'm Georgi Oganov. I don't have any coffee left because it's the middle of the night. It's 8 o'clock at night. Why would I be drinking coffee? But I do still have the news. So it's a pretty eventful day. There's a lot happening. I've coined the term the Great Correction because there was a lot of earnings calls today with a lot of big companies and a lot of correction across the board. Everything that was high is now low. Everything that's low is now high. Before we get into that, I do want to start with the story about the Federal Reserve. So I'm going to share my screen with you guys. I want to make sure because I always end up not clicking the right button and not sharing it. So the Fed has paused interest rate cuts, kind of what we talked about the other day on the channel. I thought that it's probably going to be a temporary pause, but sooner or later, I think Jerome Powell will cave. And mind you, I don't want him to. If you watch this channel, I talk ad nauseum about how high interest rates are better, but I don't think that this is going to be permanent. So let's jump into the article real quick. I'm just going to give you a quick summary. So Fed pauses interest rate cuts as inflation. Trump plans create uncertainty. So essentially what they're saying is they're going to be holding steady at 4.25 to 4.5% currently, the prime rate, because they're unsure about what the Trump administration's economic policy is going to lead to. What's going to happen with immigration, what's going to happen with trade, what's going to happen with Wall Street, et cetera, et cetera. It's honestly a valid excuse. I'm going to give them the benefit of the doubt. Now, I'm going to refer to this story that talks a little bit about the dot plot. So you don't really need to know what the dot plot is, other than all it is the Federal Reserve's quote unquote plan of where and when to cut interest rates. It's not set in stone. It's just guidance. So it's a plan that the Federal Reserve reissues every 3 months. And it says, hey, we feel like we could be cutting here. We could be cutting there. So this is the dot plot still from December. This one hasn't been updated according to the last Fed's meeting. So best case scenario, according to the dot plot, the Fed's new median rate projection for 2025 was just 2 interest rate cuts. Now, interestingly enough, the Federal Reserve did plan to cut about 3 times last year. So in 2023, they made the plan to cut at least 3 times in 2024. Everybody thought that would come in January, then in February, then March and April, and so on. It kept getting kicked down the road. On this channel, I talked about how the fundamentals are not there for a cut. And then came September and they decided to cut anyway. Inflation was still present. It was definitely reduced, but it was nowhere near the rate that they wanted. According to even their own metrics, they were trying to get back to 2%. We were not at 2%. We were closer to 3%. But then when you factor in a number of other assets that we've talked about on this channel that I feel should be included in interest rate calculations, it was much higher than that. However, they still cut. They cut exactly 3 times, including the first one being a jumbo cut of 0.5 percentage, so 2 basis points, ending the year at a full 1% cut. So they did follow their dot plot in 2024. There's no guarantee that they'll do that in 2025, but on the books, there are 2 potential cuts. Now, the dot plot doesn't define what that is going to be. Is that going to be a 0.25%? Is it going to be 0.5 percentage? We don't know, but I would assume maybe about 0.5 percentage. So best case scenario, even according to their most aggressive structure, even the most aggressive dot plot, we're probably looking at about the Fed rate moving from about 4.5 to about 4%, from where it is now to about 4%. Now, again, they're saying they're going to hold off. Now, Trump did come out swinging, as Trump does. And I'm just going to underpin a few of the things that he said. So some of his accusations are actually very valid. So he said that Jay Powell and the Fed failed to stop the problem they created with inflation in the first place. That is true because they didn't clamp down quickly enough. Now, Trump is to blame partly for this inflation as well, simply because he was the one that helped create it with all of the stimulus that happened during COVID. Everybody believes that this was just a result of manufacturing lines opening up. I got to stop this video before. There we go. That's what I don't like about Fox Business. Everything is video, which is nice, but it's also kind of a downside when I'm sharing articles. Now, Trump was partly to blame. Congress was partly to blame because they printed trillions of dollars. I think during the first 2 years of COVID, 40% of every dollar that was created happened during those 4 years. So the M1 rate and M2 rate just went through the roof. Trump was to blame for that. However, the Fed definitely didn't crack down quickly enough. They said inflation was transitory. They didn't go high enough for long enough. And now we are where we are. So some of his complaints are valid. Now, what he's saying is he's going to work extra hard to try to increase American energy independence, slash regulation, et cetera, but he's coming out swinging for Jerome Powell. The interesting thing is going to be what's going to happen in the next subsequent 6 to 7 months. How much longer is Trump going to tolerate it, and what is he going to do? I honestly don't know. I do think there's a very, very strong chance that Trump tries something unorthodox, which is very on par for him. And what will the Fed do in response? I've said time and again, I don't think Jerome Powell is a man with a backbone. I think he is very weak and malleable. There's a good chance that Trump is going to win. I think he's going to try every single legal pressure possible. So I think there's a chance that we may see greater cuts than what the dot plot is showing, or what the market sentiment should be. The market reaction should be. If it was up to me, we would take interest rates up to 7%. Paul Volcker did it, and it turned out fantastic. It ushered in a new age of prosperity for America. Jerome Powell is not Paul Volcker, and I don't think he's going to come close to being it. So if I had to guess, yeah, we'll probably see some kind of rate cut coming in the next 6 months. Okay, let's move on to the next story. So let's talk about some of the winners. So I guess really there's just one winner. No, there's two winners today. So Meta. Meta had a fantastic quarter. So they were estimating of six. Let me see. Sorry, 1 second. Every time I switch articles, it always takes me a second to get my bearings. So revenue for the last quarter reached $48.4 billion, above the expectation of $47 billion even. That's a 21% increase from the previous year. They reached new earnings per share, and I'm trying to find that number. Now I can't. But overall, sorry, I lost track of it. Oh, here we go. Sorry. Earnings per share were $8.02 compared to the Wall Street estimate of $6.76. So just monster earnings per share. Major growth in multiple revenues, including AI. I'll give them that. But the main driver of these revenues was what? It was advertising. So not only did they have more ads that users saw in the quarter, but the price for ads were increased as well. So these were up 6% and 14% respectively. So 6% more ads on Meta platforms and an additional 14% in revenue from every ad that there was. So ads are still the core of their business, and they did fantastically well. Now, the interesting thing about this is AI. So Meta is saying that despite the revelations of DeepSeek this week, they still continue to plan to invest heavily in AI. So this article is talking about that right here. So Zuckerberg says Meta won't slow down AI spend despite DeepSeek's breakthrough. In fact, they want to double down on it. Zuckerberg discussed DeepSeek during a call with analysts Wednesday as part of Meta's fourth quarter earnings. I want to see the number. He's investing a heavy amount, and I do not see what it is, but they are doubling down. Yes, they plan to invest another 60 to 65 billion this year just in their Llama AI software, which is open source, much like DeepSeek's is. But it is interesting that they're still continuing that when everybody else is kind of backtracking and reevaluating. Now, there is another theory to this. And maybe this is what Mark Zuckerberg is banking on. Clearly, the Trump administration is being very pro-AI. There was the whole announcement of a $500 billion investment into data centers, into SoftBank, into Larry Ellison, OpenAI, this massive corporation conglomerate, this unholy alliance between state and business. This is going to be a major push for the Trump administration. And there is the argument that, similar to the arms race during the Soviet Union, the more that another country develops their AI, the more funding America will pool into it. So in other words, now that the arms race has started, it doesn't mean that NVIDIA is going to go down. It means they're going to double down and try to advance their R&D to create an even better graphics card that can do more and is better optimized towards AI specifically, because let's not forget, most GPUs are just really gaming GPUs that have been modified, sometimes not even at all, in order to perform complex large language models. So is this arms race going to motivate NVIDIA to double down and do something else? Is it going to cause companies like Meta to double their research into AI software in order to try to beat companies like DeepSeek? I believe that's the motivation that's coming out of this. I don't know if that's true. From a consumer perspective, it's fantastic. Not the taxpayer money going to these major corporations, but the fact that these major corporations are going to make massive investments into their own softwares and into their own companies is good, because we're going to see competition in the market like we haven't seen. One of the differences between this arms race and the one during the Soviet Union was, during the Soviet Union, it was governments racing governments. And even though we did reap benefits and advances in science, mathematics, physics, etc., those were years down the line. Whereas these are consumer products that we can actually reap the benefits of right now. So I don't think this is necessarily a bad thing. In addition, to underpin this theory that I have, SoftBank is in talks to invest another $25 billion in OpenAI directly. This is aside from that $500 billion fund that we were talking about a couple of days ago. So even after the revelations of DeepSeek, this is still happening. So it's not a surprise so I guess I shouldn't say it's not a surprise, but this does kind of underpin that theory that perhaps this is really just the arms race starting in and of itself. Now, one thing I want to show that I still think is kind of hilarious, one downside to Meta's earnings call, is they are still losing a massive amount to their VR. So they lost about 4.97 billion while generating 1.1 billion in sales. I don't understand the motivation behind that. I didn't understand it the first time when they were losing, like, 18 billion or 8 billion? It was some ridiculous number the first time they tried this. It's never ended. It's still this ongoing experiment that nobody uses, but they are still trying to make virtual reality happen. So it's Mean Girls. Now, let's talk about another winner, and that's IBM. IBM had a fantastic quarter as well. Shares rise 9% on earnings beat. So the expected earnings per share was 375. They came in at 392. Revenue was estimated to be at around 17.54 billion. They came in at 17.55, just above that. They had fantastic growth in multiple sectors, obviously server farms, cybersecurity, etc. So they're doing fantastically well. While this is one of the reasons I say it's kind of almost a realignment, is a lot of the fancier companies, like we'll talk about here in a second, Microsoft, OpenAI, NVIDIA, are coming down, whereas companies that have kind of been on the outs for a little while, like Meta, is still not where it used to once be, is coming back stronger. And an ancient company in terms of tech, like IBM, is showing that it still has major strength as well. All right, let's talk about some of the losers. Microsoft shares slipped on weak quarterly revenue guidance. Now, Microsoft actually did pretty well. They beat earnings expectations. So earnings per share was estimated to be at about $3.11. They came in at $3.23. Revenue came in at $69.63 billion versus $68.78 billion. It's almost $1 billion above what was estimated revenue. They had a fantastic quarter by every stretch of the imagination. What the problem is their growth is slowing. And that is what Wall Street looks at more than anything else. Their growth, specifically with their Azure, I believe I call it Azure, but their Azure cloud computing is slowing drastically. Their AI usage is slowing drastically. The DeepSeek scenario is not helping them as well. And so there's a major headwind coming towards Microsoft. That they're saying that their growth in artificial intelligence is going to supplement this with an annualized 13 billion in annualized revenue, and this is only going to grow. It may, but overall, this is kind of a major headwind. This is some of the lowest growth they've seen since early 2023. Speaking of terrible growth, Tesla, really bad. Tesla is having, if they're not having a crisis, I don't know what they're doing. Tesla's fourth quarter results miss estimates as automotive revenue drops 8%. Let's not forget that yesterday we reported GM, and they had a fantastic quarter, almost record-breaking quarter. Even though their stock fell because of public sentiment because there's worry about what would happen in the Trump administration, their guidance is actually fantastic. They had growth in both their combustion engine and their EV divisions, but Tesla is tumbling. So to give you an idea of how bad it was, their earnings per share was 73 cents. The estimate was 76. They missed both their high and low market estimates. Revenue was only at 25.71 billion, whereas their estimate was 27.26. So they're down almost $2 billion in revenue. And this is, let's not forget, quarter after quarter, Tesla is declining rapidly. And it's not, the scary part is it's across all of their models. Everything with the exclusion of the Cybertruck is doing terrible. So the Model 3, sales of the Model 3 are down, sales of the Model Y are down, sales of the Model S are down, sales of the Model X are down. Their Model Y, which is kind of their flagship, which is always one of their top sellers, is down. So by every metric, every single division is down. They are doing really, really bad. I don't know how the company turns this around because, in all honesty, Trump is, I'm sorry, not Trump, but what's the difference? Musk keeps trying to use gimmicks in order to try to rescue the company. Obviously, his AI company was nothing but that because it's a division of Tesla itself. Now Elon Musk is back to talking about the robo-taxi or the Rabuvin or the Rabu car. If you watched his weird Twitter announcement, he doesn't say robo, he says Rubu. So it says Tesla will begin to produce the robo-taxi and his Optimus Pilot production here in 2025. So that's that little robot that was walking around his robo van demonstrations, which turned out was actually being piloted some of the time. This is nothing more than a publicity stunt that he's trying to save face. He's trying to keep the stock value where it is. This is kind of on par for the course for Elon Musk. He does this very well. I think this is why him and Trump get along very well, is they're both masters of media. They know how to hype. They know how to get the public aroused by new ideas. And this is exactly what he's doing. But I think seeing as how bad Tesla is doing, I don't think he's going to get away with it as easily as he did last time. And we both know that these things are not entering production in 2025. We've seen that story before. It's not going to happen. So major realignments in the market. It's very interesting what's going to come in the next weeks, months, and potentially a year. Every single sector seems to be affected. So that's it for today. I hope you guys enjoyed my video. I will see you guys back here tomorrow, and I hope you have a productive Thursday. Bye.